Welcome to today's webinar, in association with Zephyr Homeloans, an introduction to Zephyr and unusual buy-to-lets. My name's Kris Corns, I'm the Operations Director here at Crystal. I'll spend the first few minutes giving you an introduction to Crystal Specialist Finance and the unusual buy-to-let market, before we fly straight into Mark's presentation, giving you a bit more information about Zephyr, how they can assist, and their view of the buy-to-let market today. So to start with, who are Crystal Specialist Finance? We are a specialist distributor. We have over 80 lenders on panel across our 6 business sectors, and we can offer both exclusive and semi-exclusive products and lenders. We are 100% dedicated to the intermediary, and we do offer training, BDM visits, ongoing case management and case handling from there. And as this slide shows there, we are multi-award winning, we're still a family-owned business, and the team have got over 200 years collective specialist finance experience. 5-star rating on Trustpilot, and our motto for the year is making specialist finance crystal clear. And one thing that we are genuinely is passionate about specialist finance. So we've broken that down into an acronym. First of all, the people that you'll be working with. You've put your trust and your customers' trust in us. So we'll handle that with care, and we'll talk to you to provide updates on your cases. We won't just hide behind a system or hide behind an email. We know we're only as good as the last case you did with us, and we want your next one. So therefore, we will assist and support you throughout the life cycle of the case and beyond. The key factor for everything we do here is about service. Our flexibility means that we can find solutions for your customers, and we've got relationships with lenders which maybe other packages don't, or experience it dealing with lenders that can offer a view to your case that can solve a problem. Speed. We know the world of specialist finance needs to move quickly, so we aim to deal with it quickly, and in doing so we aim to respond quickly and complete your case in as short and as efficient time as we can. Inform. Today, for example, we're giving you information on market trends, and we provide webinars, we provide podcasts, we provide downloads, all materials to ensure you're one step ahead. We don't market directly to the borrower. All of our focus is purely on the intermediary, so for us it's about educating you guys as to the opportunities that are available and solutions to the clients that you may not have thought you could assist. And the opportunity, specialist finance can appear daunting, so we assist you with your current case but also help you find new ones. And then the transparency side of things, all fees are discussed and agreed up front. We don't want anything creeping out of the woodwork at the last minute to surprise anyone. Although we are aware that occasionally things do hit problems, things like down valuations or the client not able to provide documentation, things like that. So we think it's important that we work together to fix that. Alternatively, if we're unable to assist, then it's important that we tell you that very quickly as well. We understand that you have the client at the end of the transaction, so it's very important for us that we can deal with things quickly and easily to mean you can give them the very best outcome. Now, having mentioned earlier that we don't hide behind technology, we are focused on technology. We think technology should be used as an enabler. So it won't replace a broker, it won't replace the people we've got on the phones or anything like that. But what it will do is speed up that application process, reduce things like double keying or reduce errors that can occur in the process. Just make things move a lot quicker and a lot easier. After all, it works well on the residential or the buy-to-let side of things. And then the key thing that we offer for you here is our expertise. Our people have more than 200 years experience in the sector. We don't do anything else. We don't do vanilla mortgages. We don't do insurance or conveyancing or anything like that. So we know what we do, and we believe we're very good at it. So what is specialist finance? It's anything really that's outside of the mainstream. So for us, we look at a bit of residential, but where we come into our own are things like new builds or first-time buyers, ex-local authorities, things like that. We're particularly strong with complex income proof or even limited income proof, so contractors, newly self-employed, things like that. For buy-to-lets, it's a much growing area at the moment that you'll see over the course of the next few slides. But where we come into our own here is Hmos, portfolio student lets, and the big boom area at the minute, limited company buy-to-lets. We're traditionally known as a commercial packager, and commercial is still one of our key areas and one of our core strengths. And that could be anything from your typical traditional kind of retail unit, an office unit, a factory, anything like that, but right the way through to a mixed-use property, to a shop with flat above, or even expats looking at buying commercial investment units. Second charges, an area we've grown into over the last couple of years. If you're having difficulty arranging a remortgage for a client, you should certainly be considering second charges. But these can be used for home improvements, capital raising, debt consolidation, or even just raising money for things like holidays or school fees. Certainly a viable alternative to a refinance. An area we particularly love here is bridging finance. So short-term lending, auction funding. We can still do things like below market value transactions or completion within 28 days that you get at auction timeframes, things like that. And then development finance. This could be anything from a plot of land, literally a ground up spade in the ground build, right the way up to a light refurb. So buying a property, a quick tart and turn, and then either sell or retain onto a buy-to-let. And these can be done on low value properties. They can be done through permitted development, overseas borrowers, or even trusts looking to invest. One key strength of Crystal is that although we offer the 6 sectors, we can also do a lot of work across the sectors. So for example, we could do a bridge to purchase a plot of land, development finance then to do the work, and then a buy-to-let loan to take that out afterwards to retain and add to your client's portfolio. So although we offer a specific commercial arm or a specific development specialist, we can certainly pass the deals around and get the best fit for your client and find the best solution that they're looking for. So rates, as you can see there's nothing scary on that page. Residential 224 up to 90%. A key area for us as well is micro mortgages. So a first charge loan that starts at as little as 3,000 can certainly solve a lot of problems for especially elderly clients as well that are looking to pull some money out of a property. Buy to let 269 up to 85%. Commercial 275 up to 80. Second charges there, looking at mid threes. There are even lenders now going up to 100% loan to value. So certainly speak to Francis in our office here and let's see if we can get some deals done for you there. Bridging rates from 0.43. We've taken off the LTV there purely because BMV transactions, for example, we can do forward funding development works. So there's a lot of flexibility around bridging. Very popular sector for lenders, very profitable sector for lenders, and as long as the client has a plan, the bridge isn't the ultimate aim here. A bridge is a way to get from a problem to the solution. So if you've had a chain break or the property's unmortgageable or it needs some work doing to it, a bridge will fix that problem. It will take you from where you are today to where you want to be tomorrow. So as long as the client's looked at the tomorrow and what we can do there, they're an excellent product to be used. And then development finance, rates from as little as 4.7%. So there's nothing scary on there. I'm sure we can all remember back a few years where residential mortgages were beginning with 5s and 6s. So for us, the key strength at Crystal is we actually get specialist finance. I touched on it earlier, we don't do vanilla. So for us, adverse credit, low credit scores, tight completion deadlines, portfolios, anything that you can see on the screen there are just a few examples of the areas where, for us, these are normal transactions. Use that experience, speak to us. We understand the lender's appetites, we understand their processes, and we can ensure that deal gets done very quickly, very easily, and your client actually gets the very best deal in the market for what they're looking to do. So specifically on the buy-to-let side of things, these are areas that we've completed cases in the last couple of weeks. So DWP lets, student lets, mixed portfolios. We are seeing landlords now diversify a lot more. People that maybe would only look at your traditional terraced buy-to-let property, and they're looking at ways to maximise that income stream. So converting that to a HMO, or maybe looking at a flat above a shop that can generate a higher yield for them. So it's much more involved now from a landlord's point of view. So the lenders are becoming more adaptable to that. So the products are now becoming more suitable for the needs of the modern landlord. So inherited properties, consumer buy-to-let, we're particularly strong in that area. Properties in need of work, again, the fact that we can do a bridge or a light refurb first and then the term afterwards is something that I'm doing a lot of at the minute for a number of clients. Ex-local authority properties, you'd be surprised how many lenders don't care about that. As long as the property's got good demand and is in a decent area, can generate the rental income, then we can get a deal moving. New builds, expats, even combine the two, not a problem for us. HMOs, again, a real growth area at the moment where people are looking to maximise that yield. So if you've got a property with a 4-bedroom property generating £1,000 a month rent, you could turn that into a 5-bed HMO and get £400 a room. So you're instantly doubling the return that your landlords can get, and there's normally not a huge outlay to get that done either. Let to buy, great alternative, especially if property sales stagnate. Depends on which publication you read on which day. There's different stories as to whether house prices are rising, falling, whether sales are increasing or decreasing. So it could be that it's just not the right time for your client to sell a property. So they can quite easily retain that, pull the capital out, buy another property, and then they have an investment in the background as well. Live work units, not as popular as they used to be, but still can be done. Limited companies, as I touched on, a very big growth area at the moment. With the tax pressures being put on the private landlord, limited company is an excellent solution for a number of them. Not for everyone, we'll touch on that shortly, but with the right advice and the right structure in place, it's an excellent way to mitigate tax issues there. Flats above shops, fast food, not an issue for us. First time buyers, first time landlords, again we have lenders that on panel that will do those. Properties owned for less than 6 months, or even a transfer from personal through to limited company. You can see there's various scenarios. I'm sure you may have seen some of those in your day-to-day business that you might think, don't know where to go with that, or I don't think I can assist. Pick up the phone, speak to the guys here. We'll certainly do what we can to get that deal placed for you. You may be surprised at what kind of rates are coming back as well. So transferring an existing portfolio into a limited company, about a year ago this was extremely popular. We were inundated with inquiries for people saying, I want to move my personal portfolio into a limited company because I'll make a huge saving on tax. But when you actually start doing the maths, it might not be the best thing to do. Bought a property for 250 back in 2001 in this example. Let's say it's now worth 1.1 mil. It's a purchase by the limited company from the individual. So therefore that has two huge implications. First of all, stamp duty. So in this scenario, £85,000 worth of stamp duty to be paid. And secondly, because it's a private sale, it's capital gains tax. So in this scenario here, something which initially may be thought as simple as a transfer of ownership, a change of name on the property, or however you want to phrase that, you're actually going to incur a £320,000 tax bill. Is that the best solution for your client? How long will it take them to recoup that outlay from their personal tax situation? Factor into that, the interest rate may be slightly higher for a limited company. There will be valuation fees, legal fees, product fees, things like that to factor in. So it's not the best solution for everyone. That said, with the right advice, with the right structure in place, it can be a very lucrative way of doing things. It might be the right thing to do. The limits of mortgage interest relief only apply to individuals, so a company can continue to offset all of its mortgage interest costs. You can retain the profit within the company, use that for reinvestment. Corporation tax rate is lower than individual rate, and by 2020, the way things stand at the moment, that will be dropping down to 17%. And the new dividend tax provisions mean that the first $2,000 is tax-free within the dividend tax rates shown underneath that. So it may be beneficial for your client to actually do that. As I say, it is something that needs to be looked at carefully, and it's something that we really push clients to take the correct legal advice. We're working with a firm of accountants at the moment to provide that advice to clients. And with that, it is a bespoke process because they have to understand the long-term plans. You know, is this an investment vehicle? Is this a retirement plan? Is this something that they just want to do to make a quick profit and maybe back out of the market in a few years? All of that makes a difference on what the best option is for your client. And as you've seen, the market where we are today isn't where it was 10 years ago. We've got the rise now of landlords. We have portfolio landlords, limited companies, overseas borrowers, and even more people becoming self-employed. All of that means that not only do the lenders have to adapt and change the products that they're offering, but also as brokers, as advisors, as financial advisors, you need to adapt as well. You need to be able to find homes for these solutions. The buy-to-let market has seen many clients over the last few years move to 5-year fixed rates in order to benefit from the enhancements on the DSCR, the rental calculations. So therefore, we can't be as reliant on product transfers or remortgages as we used to be. Therefore, what plugs that gap? For us, let's say yes to more clients. Let's find homes for all of these so-called difficult cases. So a couple of examples here for you before we move on. The landlords, overseas and overseas borrowers. This was a great case study that we did a couple of months ago. 79-year-old living in Florida, property value of 370k with just a very small mortgage. Existing buy-to-let had expired, needed to be repaid. Her initial plan was to sell, didn't fancy doing that. She was getting really good rental income. So we managed to get her a pound for pound remortgage on a 10-year term. Interest-only loan completed within 2 weeks. Portfolio situation. So client wanted to move his 26 properties in the southeast, total value of 14 million. Total lending was 7.1. We needed to do the whole thing together so he could benefit from incorporation tax relief, having spoken to his accountant. So we got this done within 8 weeks, 2.7 over LIBOR, 10-year interest only. And with the 1.5% arrangement fee charged by the lender, the introducing broker received 1% commission on that. It's not a bad day's work. One of the change that's kind of slipped under the radar a little bit is the cash basis. So the way that rental income is recorded on accounts has changed recently. So the cash basis should put clients in a better position, but obviously it's something that might trip a few up, that they only pay tax on the actual cash they've received rather than the rent that's due. Some individuals and partnerships switching to use this are likely to incur a small one-off timing cost, but again, this is where speaking to the correct advisors and having the right people in your corner is essential. Speak to your accountant, he'll be able to explain all of this to you in more detail. There is also a really good HMRC webinar which goes into a lot of detail around this and can put you in a really strong position when talking to your clients. A couple of case studies for you. We were approached by a new build broker looking to place a case for an expat. Teacher in Australia, obviously some lenders have got issues lending to expats in Australia. She'd been there for a number of years, wanted to take advantage of an opportunity in the Midlands. She knew the area very well, having visited previously, and attracted by the yield, the quality of the property. So 3.79 on a buy-to-let fixed rate there at 75% LTV. Not a bad deal at all. Overseas national, nice complicated one there. BVI registered limited company, 3 directors, all based in Singapore, looking to remortgage a 5 million portfolio in order to redeem the various existing lenders they got strewn across there, but also to release capital to purchase additional properties. Added to that, we needed to top slice the rental income to service the loan. So I'm sure you're aware lenders are now looking at background income a lot more and looking at rent from other properties. So with this one, we needed to use additional income to support the loan the clients were looking for. So with this one, we utilised the lender who took a view based on the rent and experience. We sourced an offshore opinion from a legal team in order to confirm the structure and get everyone comfortable. All of this was done within 3 weeks from application. The client could get the remortgage done, but also could then purchase the additional properties very quickly on the back of that. Lending for refurb costs, excellent new product there from Shawbrook Bank, where they'll go up to 85% LTV. Customer can then borrow towards the purchase price, and then if they've got the correct plans in place and the work's not going to exceed certain levels, etc., then they can forward fund the additional work. Again, with Shawbrook as an existing customer, you can also benefit from reduced rates on the buy-to-let takeout as well. This is a really excellent product that you should be using more. And then the bridge to let. This is a really strong area at the moment, and we were lucky to get a case, one of the first cases through with Precise on this one, and 17 working days start to finish. So the client borrowed 197,000 against a purchase price of 276, spent 15,000 on a complete refit, and by the time the loan was finished, we were up to 243. The key thing with this product is that on completion of the bridge, the client receives 2 offers, one for the bridge, one for the term loan. So once the work's done, it's literally a case of contacting us, we speak to the underwriting team, they instruct the valuer to go back out. It's the same valuer that saw the property previously, so he knows exactly what he's looking for. And provided nothing's changed, then it's literally a case of straight into legals, let's get the bridge redeemed and let's get the buy-to-let switched on. So this one, the figures just worked out absolutely perfectly for the client, and the buy-to-let takeout on that was completed within 10 days on the back of the re-inspection coming back in. So again, excellent product, great solution. This was a traditional buy-to-let landlord that just saw an opportunity to buy at purchase, spoke to his broker who was explaining this product to him, and then we got the whole thing completed. Started in November, and the whole process was finished by the end of February. That includes the bridge, that includes the refurb, and includes the takeout from there. So absolutely amazing product and outcome for the client. I touched on at the start there that by dealing with a packager such as Crystal or a specialist distributor, there are numerous benefits. We have a series of semi-exclusive products that you can see there in bridging, buy-to-let, commercial and residential. But also we get things like enhanced procuration fees. We get on-site underwriters that are mandated to work cases. We get designated contacts at solicitors. And we can also, with some lenders, get offers produced quickly. So all of these incentives we can pass on to you, all for the same outcome. Let's get the client the very best, the very quickest possible with the most efficient, streamlined, transparent transaction. A very quick overview there of who Crystal are, what we do and how we can assist. And again, the key thing there is just get in touch with us. You've got our phone number, you've got our website, our email address. Let's just have a conversation. Let's talk about what your client's looking to achieve, how we can assist, and let's get that done. And please now hand you over to Mark from Zephyr, who will talk you through their proposition. Thanks, Mark.
Welcome to Zephyr Homeloans. My name is Mark Rookyard, Business Development Manager. The aim of my session today is to cover 3 important things which are important to you guys, is to increase the placement of your cases, to reduce rejections of cases and make your life easier. To allow me to do this, I'll take you through a brief overview of what I'm going to talk about. So firstly, talk about who Zephyr Homeloans are, reasons to use us or consider us, and some of the sort of key selling points or USPs that we feel we have in the market, how to submit business to us via the team here at Crystal Specialist Finance. I'm going to touch on the underwriting and some of the key submission points that you need to make day one to allow your cases to proceed through to offer and completion in the shortest possible time. And then that finally leading into a summary of the sort of key areas that we've covered and how we go forward from there. So Computershare, who are we? Computershare is a global company. We operate across 21 countries with over 16,000 clients and 12,000 employees. Global leader in financial services administration, so we operate across financial services and governance solutions, including mortgage origination, credit management and customer services. In the UK alone, Computershare manages over £50 billion of mortgage assets that are across 25 plus clients. Now we do manage back books of lenders, many high street as well as a number of specialist buy-to-let lenders, so we do have a good knowledge of buy-to-let landlords and how portfolios have been managed over the last several years. Topaz Finance is a fully FCA regulated lender based in the UK, been operating since 2006. Zephyr Homeloans is a trading style of Topaz Finance Limited. So although Zephyr Homeloans is a new name in the mortgage market, the depth of experience within the business means that we are confident we'll deliver the service that you and your customers expect. So I think it just gives you a bit more of a backdrop into terms of who we are, because a number of brokers when we came to the market said, who is Zephyr Homeloans? But when you start to understand the company behind that, we're a huge company. As you can see, we have over 12,000 employees operating across many different countries. And this is a really exciting time for us to be joining the lending into the UK specialist buy-to-let, and one that we're looking forward to working forward with intermediaries very closely with. Zephyr Homeloans. The market that we're in is the specialist buy-to-let market, and we have a very limited distribution model, so you won't be able to access us via any networks or mortgage clubs. We have a small number of introducers, key partners, and Crystal Specialist Finance are absolutely one of them. We've worked with Crystal Specialist Finance for a number of months now. They understand our processes and they're a key partner of Zephyr Homeloans. There were some interesting facts come out in the last couple of days that there is over 2,100 products available now in the buy-to-let space for brokers, which is the highest that it's been since 2007 when there was over 3,300. So there's certainly more choice out there for you brokers, advisors, when you're looking at buy-to-let lending. Where we sit in the market is alongside the specialist lenders, so the likes of the Kent Reliance, the foundations, and the lenders that you can see on your screen precise. So we're not in the mainstream world, so very much looking for the specialist distribution, which the buy-to-let market does tend to be moving more towards now, which is good news. In terms of the products that we offer three different LTV bandings: 65%, 75% and 80% LTV. Now within each product banding we have three different fee structures. We have the 1.5% of the gross loan amount, we have the flat 1995 for a maximum £250,000 loan, and we have a zero fee option as well for the client. Now we've been in the market for a couple of months, started lending sort of late December, and the zero fee is proving very popular amongst the advisors out there. Now, in terms of the products it's available for, we're looking at standard properties, either on an individual ownership or an SPV, specialist properties, which we define as HMOs, multi-unit freehold blocks, and flats above commercial. So all of them products are available within them different pricing structures. Just to give you an indicative sort of feel of where we are from a pricing point of view, I've mentioned that we are specialists, but I think you'll be surprised when you see how competitive our rates are. So you can see on the 2-year fixed rates there, at the 65% LTV, we have a rate starting at 2.69%, and that carries a 1.5% arrangement fee, 2.78% for a loan up to £250,000, and that carries a 1995 fee, and lastly the 3.03, which is a zero fee. So you can see that there isn't a great deal of difference between the pricing brackets there. At the bottom you have the 5-year fixed rates starting at 3.26%, going to 3.51 for a zero fee product. So hopefully it gives you a feel of that. Although we are specialists, we're certainly, from a pricing point of view, competitive. Let's have a look at some of the key selling points that we feel we have. So firstly, we're lending in England and Wales, so we don't lend in Scotland at this stage. The LTV that we go to is 80%, and that's available to every product with the exclusion of flats above commercial, which is where they are capped at 70%. So your standard properties, your Hmos, multi-units, etc., all available to 80% LTV. Age 95 at completion of the mortgage. We've seen a number of applications over the last 2 or 3 months with customers in the mid-80s looking to take a loan up to 95 at completion. So we don't have a maximum age where the customer can take the loan out. Our loans go from 5 to 35 years, so in theory the customer can take a loan out when they're 89, 90 years of age. Income top-ups are acceptable. I'll cover that a little bit later on, but we can support the application if the customer has additional income, either earned income or to subsidise from the portfolio. There isn't any minimum income on any application, with the exclusion of professional landlords. Now, we define a professional landlord as somebody who's driving their income solely from rental properties. Now, there is a £25,000, but I must stress that's gross income. So if the customer's got 4 or 5 properties, then you would like to think they've got at least £25,000 rent coming through that property portfolio. Aside from that, we don't have any minimum income. So in terms of the parameters, employed it's 6 months employed, and self-employed it's 2 years. So in terms of the cases coming in, we will look to evidence the 6 months employed history or the 2 years self-employed, but there is no minimum income aligned to either of them two products. We have seen a number of applications coming in with high rental income, but the customers are declaring that they are a low rate taxpayer. We will go off that. So if they declare they are a low rate taxpayer, we will go off the relevant ICR, which we'll cover a little bit later on as well. I just didn't touch on the pensions income there. So I've mentioned employed, self-employed, but if it's in pension income, then all we're looking for is to evidence the customer's got some pension income there. Flats above commercial, that's a really interesting product. We've seen a number of applications in this space. Now, we do panel manage through Connells. Now, from a risk point of view, we're okay with a risk if it's a flat above commercial. I've mentioned it's 70% LTV. We will rely on what the valuer says. If it's mortgageable and saleable, we will accept that from a risk point of view. We've seen, as I say, we've seen a number. We had one earlier this week, which was valued at £975,000. We were looking for about £600,000 from a loan amount, and it was above a Wetherspoons, 3rd floor flat above a Wetherspoons in London. Now, from a risk point of view, we're okay with that, subject to the valuer saying that it's a property that's mortgageable and saleable. Ex-local authority and deck access, again, another opportunity for you guys out there. We don't restrict the number of floors. Anything above 3 floors needs a lift. Anything above 10 floors needs referral into the guys at Crystal Specialist Finance. Now, we have done a number of cases already that are above the 10 floors, but we just need to get them run past an underwriter before we can give you the decision on that. Now, as a specialist lender, we're not credit scoring. We're doing what we call a credit search, which you'll be all familiar with. So, in terms of the minor adverse, we will look at customers that have got credit blips, as we call them, on their profile. So, to give you a high level, we can take one mortgage arrears in the last 24 months, but nothing in the last 12. Defaults, nothing registered in the last 24 months, and CCJs must be satisfied in the last 3 years. So, anything outside of the 24 months or 3 years for your default CCJs are ignored from an underwriting point of view. Loan size is very good in the specialist space. We will lend up to £2 million. Now your £2 million is at an LTV of 75%, and we will lend up to £1.5 million up to an LTV of 80%. Flats above commercial are capped at 70%, but we will lend up to £1.5 million, and your HMOs are up to £1 million, and your multi-units are also £1 million. In terms of HMOs, we will lend up to 6 bedrooms, and the same for multi-units. Debt consolidation is another area that we're comfortable with, so we've taken out a number of bridging loans already where lenders will class them as debt consolidation. We are okay with debt consolidation. Consumer buy-to-let is one that we've just changed, so we haven't as yet got it into policy, but our ruling on this is that providing the customer has at least one of the buy-to-let, then we will accept that application. So as an example, you've got boyfriend and girlfriend living in a property, they're going to do a let to buy. They may already have one of the buy-to-let in the background. If they have, that's great. We will lend on that property because we're not classing that as a consumer buy-to-let. For any clarity on them, on any of them criteria points, I would suggest that you give Crystal Specialist Finance a call, where their underwriters will have access to not only myself but also to our team at head office as well as our dedicated underwriters. Some sort of criteria here in terms of the customer's experience. We will accept up to 4 applicants. Now, one of the applicants must have a residential for at least 1 year. If they are looking for a standard property, that is, if they're looking for a HMO multi-unit, then one of them must have had a buy-to-let property for the last 12 months. We will lend to a maximum of £5 million in one mix of customer. So, for example, it's XYZ SPV at £5 million, and then ABC SPV for a further £2.5 million. The criteria to remember on the flats is that they must have a minimum 70-year lease at the end of the term. Minimum lease at the term end of 70 years. Now, we have done cases where we will extend the lease on a simultaneous transaction, so that's absolutely fine as well. And I've already mentioned that there's no height restriction on blocks of flats other than over 10 floors, referring to Crystal. Moving on. For this slide, I thought I'd actually share with you a couple of case studies that we've actually offered on at this stage. Now, the first one is a single applicant based on the South Coast with an experienced landlord of 19 years with 4 buy-to-let properties in the background. Now, the average valuation of them properties was £400,000 a property. The security address for this one was £2.2 million. Now, the broker told me that they'd sourced many different lenders prior to Zephyr Homeloans, and it was the loan size in comparison to other properties that was causing an issue with, or a challenge with, some lenders. This particular property was extensively refurbished. It's 7 bedrooms and it encompasses a swimming pool on the South Coast. Now, there's also it sits in 3 acres of land. Rental generated from this property is £4,500 a month. Now, what the lady had done, she'd inherited some money a couple of 3 years ago. She'd taken out a bridge of just over £600,000 to refurbish the property completely and change it from its previous state into this present day. Now, she'd been doing this for over the last couple of years. Now, the challenge that the broker had is that it was a single applicant, but with only a professional landlord, but with only £3,000 declared income. The property was not tenanted at the time of the application, and there was no comparables because it's quite a unique property type, and the maximum rental in the area was £2,500 a month. Again, it had been declined with a number of lenders as it was viewed as bridging loans, and that was viewed as debt consolidation. So we took the view on that. We've got the valuation on that. We've been working closely with the broker because it's not been an easy transaction. Our valuers and risk team have been satisfied that the property is actually marketable and saleable, and there's a 3-year AST on this particular one. So I mentioned that the income was £3,000, but she can demonstrate that the net income was £3,000. She was demonstrating that the income was over £25,000 gross because she was a professional landlord. So Hopefully that gives you a feel of a quirky case, as the broker said, and told by the broker there was only one other lender in the market that would consider that case when that was a pay rate of over 6%. So very happy client. The case has now gone to offer. You can see on the top right hand corner it's a lowish LTV, it's on a 2-year fixed rate and the pay rate of 3.36%. Okay, moving on to the next case study. This is a slightly different case where the customer was adding to the portfolio of 18 properties. So Mr. had 15 and Mrs. had 2 buy-to-lets and 1 was jointly held. The deposit was coming from an inheritance and both applicants were low rate taxpayers. The properties themselves was in a new build development in Liverpool city centre. Now they are on the 22nd and the 24th floor, valued, one was slightly less, but the second one was valued at £325,000, so 2 similar loan amounts. Now they're not a professional landlord because the income is derived from many different sources: employment, land and property, etc., pensions and dividends. So all we needed to do was verify that the customer was self-employed for a period of 2 years and they could demonstrate they had income behind that. The properties were in the, as I say, on the 22nd and 24th floor, which was a referral into our risk teams. We subsequently spoke to the valuers and everything was agreed at that stage. Now, the broker also said that the issues that they had placing this with other mortgage lenders was that it was a company, the developer was known to sell new builds with guaranteed rent schemes, and a number of lenders declined this on the basis of that. Timescales were also very tight. They were given 28 days to exchange. So you can imagine lenders had declined the cases and the developer was threatening to market the property again and the customer would lose their deposit. We worked very closely with the broker. We overcome the issue of the 22nd and the 24th floor. Deposit was acceptable because it was coming from inheritance, and the application was submitted to us on the 8th February, valued on the 19th and offered on the 22nd. The exposure limits were in our policy because there was, it's a very big block of flats. And as a result of that, the developer has requested a meeting with us and the broker to explore the sale of potentially more units. So again, hopefully you can see that that's the right outcome for the customer. By working closely with the broker, we've made that happen. Touch on the individual parts of the criteria. So I mentioned that HMOs and student lets are considered. We will go up to 6 rooms, and the minimum valuation for a HMO would be £100,000. Now, again, flats above commercial properties are subject to valuers' comments. We have done a number of HMOs that are above commercial properties. Multi-unit freeholds are also considered, up to 6 rooms as well. Subject to the usual licensing laws, which I'm sure you're familiar with. If we are lending to an SPV, we can accept up to 4 applicants. The criteria that we have is that the directors must have a majority shareholding of 80%. And each director named on the application must also provide personal guarantees, and you can see the relevant SPV SIC codes are there as well. We don't take a debenture, and we can also use directors' loans as a full deposit. So it's quite okay to have shareholders within the business, but as long as the directors on the application have at least 80% shareholding in there. In terms of interest coverage ratio, we work off 125% if it's a low rate taxpayer or an SPV. We work off 140% if it's a higher rate taxpayer, and we work off 155% on the right hand side if the property is a HMO, a multi-unit or a flats above commercial. Now the two products that we have are a 2-year fixed rate and a 5-year fixed rate. In terms of the ICR, a 2-year, it's likely to be the 5.5 that we go off, because we go off the higher rate of the pay rate, should I say, plus 2%, the reversion rate, or 5.5. On a 5-year fixed rate, we will go off the pay rate only. So if it's on a 5-year product, we will go off 125. If it's a lower rate taxpayer of an SPV, 140 on a higher rate, or 155 on a specialist product, and that's of the pay rate of the product. In terms of like for like, so the customer's looking to remortgage and not borrow any additional monies, then we will go off the 125%. And again, it's on the 2-year fixed or the 5-year fixed determines what the stress test is there. Moving on to top slicing. Now we can consider this. There's a couple of caveats in there. So that firstly, the client must be earning £50,000. If they're looking to support the loan with any earned income, they must have a gross income of £50,000. Any property coming to us must be at least 125% ICR, and they can top it up to 140%. In addition, if the customers are looking to use some of their portfolio to subsidise the loan, then I would suggest that you get the portfolio spreadsheet into the guys at Crystal, who'll have a calculator, and they can work out what properties will be allowed to support the loan for a Zephyr Homeloans application. But in summary, we can use additional income, and we can use property surplus, or predatory rental surplus, should I say, across the portfolio. An example on this one is really, you can see in the client earns over £50,000 and has got a surplus after the I&E. The debt on the mortgage is £10,000. Client's income is £55,000. Rental income at 125% is £12,500. The client's expenditure was £48,000, leaves them £7,000 per annum left over. So there's a shortfall on the rental. Because we need £14,000, so we need it 140%. There's a rental shortfall of £1,500, but the customer's got more than enough income to support that loan. So that case passed from a income top up. Okay, so how to place business with Zephyr Homeloans. Firstly, you would need to register on the portal, which I'll cover on the next slide. But then basically from there, the decision in principle is submitted to Crystal, who will then take the application right the way through from producing illustrations to getting the decision in principle, to uploading the relevant documentation to take the case to offer, and more importantly, to completion. So what the brokers and advisors need to do is firstly go on and register onto our portal. So you can see the address there is zephyrhomeloans.co.uk. On the top right you have the login facility, so you would need to register as a broker, with either an appointed rep or directly authorised, and it will ask you to submit some brief details with your FCA number or your appointed rep number of the network, and that'll be an instant registration, which means that when your deal is then come to submit to Crystal, the guys can find you. In terms of process, Crystal will go onto the system on receipt of a decision in principle from the broker or the advisor. They will complete that and take it through to a full mortgage application. So at that stage, you will need to upload some minimum requirements, which will be pretty standard. Usual proof of ID, proof of address. We're looking at 3 years history. Normally the most recent proof of address will suffice. Income verification, whether a pay slip or if it's self-employed. Declaration signed by the customer. Direct debit mandate, and if it's a portfolio submission, then the portfolio spreadsheet. So, but don't be too concerned with the requirements, because Crystal will walk you through that prior to submitting an application. In terms of some underwriting points, there will be some dips. Decision in principles are valid for 28 days. There will be a number of mandatory documents that you will need to submit a submission. There will be proof of ID and residency, declaration signed by the customer, direct debit mandate, payment of the fees, the application fee. Once it goes to offer, the offer is valid for 180 days, as well as the valuation. So, but don't be too concerned with the process side of it, because Crystal Specialist Finance will work with you right the way through, from submitting the decision in principle right the way through to completion of the loan. For portfolio applicants, we define a professional landlord as someone with 4 or more mortgage properties, including the current application. So for portfolio applicants, we're looking for a cash flow business plan and your portfolio spreadsheet. The portfolio spreadsheet is probably the most important one at a decision in principle stage. The other documentation to follow when it goes to full mortgage application. In terms of how we view the background, which is quite an interesting one and is proving very popular with the brokers and the advisors in the industry. So very simply, if the property is coming to Zephyr, whether it's the security address, we will stress test that on the relevant ICR. So whether it's 125 for your lower rate, 140 for your higher rate, or 155 for your flats, your HMOs, multi-units. For properties that are not coming to Zephyr, we will take a selection of that portfolio. So let's say, for example, the customer's got 20 properties in the background that are not coming to Zephyr. We would take 25% of them. So in that case, we'd be looking at 5 properties of the 20. In terms of them 5 properties, as long as the rental on them properties is covering the mortgage and there is a surplus of at least £1, then that would pass our portfolio stress testing. So we're not a lender that looks at an aggregate on the back book of 75% as an example, or we'll stress it at 5% at 125. We basically go 100% on a selection of the mortgage of the portfolio background. So very simplistic way of viewing that, and hopefully when you have large cases with portfolios, it's easy and fairly straightforward for you guys to work out. We've mentioned that Zephyr is an intermediary only specialist buy-to-let lender, so we don't do any regulated lending, it's all non-regulated buy-to-let. We do have very strong lending aspirations for this year. We've got a funder that has got very aggressive growth plans over the next 5 years. We've already evolved the product proposition by working with a limited distribution model, because the team at Crystal and other distributors understand the buy-to-let market and can work closely with lenders to evolve the product range, which we've already done. We are a flexible lender. We've hopefully a couple of the case studies has given you an example of some of the cases that we can write, which is a little bit outside of the mainstream world and certainly outside of a number of specialist lenders' remit. So we are flexible. We do offer a broad range of competitive products across the buy-to-let market. Now hopefully there'll be some areas in there which will give you guys, the brokers or the advisors, the ability to increase the placement of cases, reduce the rejection that you already have, and make your life a little bit easier, because it is a complex product, it is a complex market. I would strongly suggest that with any inquiries you submit them through to the team down at Crystal. It may not come with Zephyr, but they certainly have a large panel of specialist lenders, but hopefully it will come to Zephyr. As a new lender, we have come to the market with a competitive product range, not only across the product itself, but the criteria. So we do have a broad range of competitive products. So I've highlighted that we're lending across all product sectors. The rate is very competitive. The criteria certainly sits well in the specialist world, and we have the service to back that up as well. So, strong lender aspirations. We've got a strong business model to really compete in the specialist space. Now, I think I'd like to sort of close really on a personal story of mine. So I've just recently gone through purchasing a buy-to-let, and just sort of set the scenario really. We're prime customers, joint application, good income, no adverse, good credit, low LTV. In my mind, I was thinking that we're going to be placed with a mainstream lender. I tried it with 2. Couldn't really sort of understand that. It was a slight down val on the rental. Couldn't get the loan amount we wanted. But as soon as I went to a specialist lender on a 5-year term, it got actually £100,000 more on the loan amount, which was an pay rate of 0.5 difference, which in the grand scheme of things wasn't a real concern. So I think my perception changed. Now I'm thinking that I certainly see myself as a mainstream customer by going for an application. For whatever reason, whether it was the stress test on 5 years was at the higher rate, but it moved me into a specialist lender, and I'm quite happy with that. I think the outcome for me was great. Got me the loan amount, and I think it sort of backs up the fact that the specialist world is becoming more the norm now. So, and at this stage, a new lender coming to market with the expertise and the knowledge that we've got on the product set, combined with the distribution and the aspirations to grow, and hopefully we can be a key part of your business going forward and help you place more cases, reduce rejections, and make your life easier. So thank you for your time today, and look forward to seeing many Zephyr Homeloans inquiries. Thank you.
That now concludes today's webinar. I hope you found the information useful. Remember, at Crystal we specialise in commercial, buy-to-let, bridging, development, specialist mortgages and secured loans. So if you have a tricky or complicated case that you need help with, please get in touch and we'll be more than happy to assist. Thank you.